Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over on M1 Finance how to target specific stocks with your equity going into the market. Say you're going to be depositing some $300 into the market on Monday. How can you put that equity towards specific stocks within your portfolio? So if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week. So consider subscribing and let's go ahead and get into it. So you may be asking yourself, why are you adding more money into the market? You're already down for the year, negative 4.01%. Well, when you're negative in your portfolio, that's when you're getting everything at a discount. What is your plan over the long term? How long are you going to be invested in the market? Me and my wife, we're barely hitting our 30s. We're very early 30s. My wife's not even 30. We have until 60 to take advantage of this Roth IRA. At 59 and a half, it becomes 100% tax free. How long do we plan on living after we hit 60? An additional 20, 30 years. So we're looking between 40 to 60 years of just having money grow within this portfolio, growing inside our Roth IRA. And after 60, everything in here, the capital gains, those dividends that are getting paid out to you, that's all going to be 100% tax free. So even if, we have this volatility day to day, week to week, month to month, over the long term, if you're investing in solid companies such as, if we're looking down the list here, we have Triple M, Apple, AT&T, we have, Cisco, Caterpillar, General Mills, Johnson & Johnson, JP Morgan, Kellogg's, Kimberly-Clark. Now, a lot of these names you'll recognize as we're kind of going down the list. These are solid companies over the long term. Some of them may fizzle, but at the same time, we're going to be checking our portfolio. I like to look at my portfolio every month. I go over my stocks, and I do my reviews at the end of the year, whether that company has moved up or down, what's their change for the year. I go over their yearly, their quarterly reports. I go over their quarterly reports on the quarter as they're coming out. But normally at the end of the year, I will take a look at that stock and kind of go over its fundamentals again, and whether it's worth keeping it in my portfolio over the long term, or if it needs to be removed and added, replaced with another one. Now, currently, we are building up our base right now just due to the way that the market volatility has gone over the short term. I made a video, 5 stocks I'm buying in December 2018, link in the top right corner. It goes over 5 stocks I'm going to be adding, which are Cardinal Health, Consolidated Edison, General Mills, Kellogg's, and Triple M. So if you want to check out that video, I go over why I'm going to be investing in the specific stocks. And now in this video, in order to target specific stocks with equity, now every Monday, I have another video going over my plan for 2018 on how I want to average into my wife's Roth IRA for the end of 2018. At the beginning of 2018, I pumped it with that $5,500 to get her a good base. That was targeted towards 2017. Now, the market did dip here in February, March timeframe. The market dipped, and that would have been a great time to buy some more shares, buy back into the market. But at that time, I also created my own business separate from my wife's Roth IRA. I created my real estate business. So during this time, I was going to transition myself, setting up my business. So we weren't really pumping a whole lot of money into the market during this time. Now, as the markets began to kind of fall apart, hedge fund managers and such began pulling equity out of these tech stocks, and Facebook, Google, these FANG stocks started to tumble, and we started going into the negative. I started pumping up more money into the market because we were in the negative. We were taking advantage of that sale. Right now we're getting stocks at a discount. We're buying them cheaper than we were able to earlier in the year. We're getting higher yield on cost, which is going to be paying us higher dividends, which will buy us more shares of those dividends at a cheaper price. So I don't want to ramble on too much. The whole point of the video, I wanted to target specific stocks. So I added 6 new stocks to the Roth IRA. As you've seen here, the only additional one that I haven't covered in one of my videos is SO, which is the Southern company. This is a utility company here. So in order to target specific stocks, I had $330 every single week going until the end of 2018. That'll max out the Roth IRA. Now, let me go ahead and bust out my handy dandy calculator. So we are going to be putting $330 into the market on Monday. Plus, we just got paid out some dividends this week of $2.13. So that's $332.13. We're going to be adding to 6 positions within our portfolio. We have 1, 2, 3, 4, 5, 6. Okay, so I want to equally distribute that cash between those stocks. So here, if we want to contribute it towards all 6 of these stocks, we'll put in $5,500. $55.35. So in order to target specific stocks, all I got to do is click on it, go to my buy sell, have it load up 55.35, and there we are. We just hit continue, we hit OK, and it's going to go ahead and mark it as pending. Now we go ahead and go back to our portfolio. We can now see that we have a pending buy and sell there, but it's a buy. So we go on next to the next one here. 55.35 is what we're doing. We go ahead and click buy sell. Go ahead and target that 55.35. We go ahead and hit continue and confirm. And all we're going to be doing is doing the exact same process for the remaining stocks. So if you have specific stocks that you feel are at a good value buy, you're going to be holding them for the long term, then you could add them into your M1 Finance portfolio, and you want to fund them specifically with this, you don't want to have M1 Finance sort of invest for you right away. They may end up pitting some 13, 15 stocks to invest in, and instead you want to get these kind of funded up. So what you're going to be wanting to do is sort of target those specific stocks and just kind of fund them, kind of get it on a base. So this is just going to get me a nice little solid $5,500 base into each one of these stocks. Now, one thing you may notice, 55.35, is that each of these stocks, they're not, they're worth more than a $5,500. Such as Triple M is trading at $196.80. And just in the last trade day, it went down 0.95%. So you're on M1 Finance, you're able to buy partial shares, which is one of the best things I like about M1 Finance, aside from them allowing you to have a Roth IRA. Roth IRA, that retirement account, that's one of the best features they have. Partial shares, free trades, that's just, gravy, extra gravy on the turkey. So, Thanksgiving reference there. Okay, so now we've confirmed all of our activity. We now have, let's go back to our portfolio. We now have these 6 stocks targeted as currently having no equity in them, but they are all set to have some sort of a buy sell, and we all know that's a sell. Now our portfolio now shows that your portfolio has estimated trades. So I can go ahead and click in here, and I can go ahead and see that currently, these 6 stocks are targeted because I only have $2.16 within this portfolio. It's going to put 36 cents towards each one of these stocks. Now on Monday, I also put in $330. So that's what's going to be added to this, in addition, $330, which is going to be pumping each of these specific stocks with $5,500 and 35 cents worth of equity. And, instead of trying to tie in these specific stocks and buying them when they're low or when they're high, these are all trading near their 52-week lows. So if we look at them just over the year on, Consolidated Edison, I think I have to go into the specific stock itself to get that graph information. But here you can see as of back in November 2017, this stock was trading at $88.92. Now, utilities have been hammered recently as they have quite a bit of debt, and with rising rates, stronger dollar, that's been hammering these, hammering these utility companies. But you can see that this company, for the most part, it's been sort of bottoming out here. It bottomed out at $71.39. Now, it does trend kind of sideways here right now. It could fall again further as interest rates continue to rise, but we don't really know that. And if it does happen over the long term, you can see here back in November 2013, just the 5-year trend here, it's been moving positive for the most time. There are instances here from January 2015 until nearly a year later where it was basically flat, and then we had a nice little growth there. It came back, rechecked its highs, and then peaked out again. So over the long term, you're going to have these instances where it does dip. It's going to go recover. It may dip again. But if you're investing for the next 20, 30, 40, 50 years and you're buying these stocks, those stocks are paying you out a dividend. Those dividends are buying you more shares for free, basically, which are going to be paying you more dividends, and it just compounds. That's the power of compounding. You're getting appreciation and compounding on your total equity, Also, your dividends are buying you more dividend stocks, which is paying you out more. So that's compounded as well. And it's let's see, there's one other metric there as far as how you're kind of getting it triple hit, but I can't think of it right now. Oh, you have your stocks that increase their dividends every single year as well. So I have all of these on a spreadsheet where most all these new ones here that I've added into the portfolio, they've all grown their dividend for more than 10 years at a time. So back in 2008 when the economy crashed, all of these stocks continued to pay a dividend. Some of them did. I believe Kellogg's had started paying a dividend back in 2000 and what was it, 2007, somewhere around there. So they don't have history prior to there, but they did pay out during the recession. So 13 years ago is when Kellogg's began paying out dividends. So that was 2005. Anyways, that is all I did want to cover in my video. If you guys have any questions about anything that was covered in the video, or anything you'd like to have covered in the future, let me know in the comment section below. I always appreciate all your guys' comments, and I reply to them all. If you guys want to join me over on Instagram, I started posting some new content on Instagram. So here I got 6 things on here. I'm going to try and come up with some fun things to kind of share, as far as not just promoting what I have on YouTube, but also having some sort of motivational Monday activities. Try and consolidate stuff. This is from another Instagram, but I try and create my own content as well. Some of the top, my recommended top 6 books as far as real estate investing. These are all books here that I own myself. And The Millionaire Real Estate Investor, #1 book that I would suggest for all investors. And then I have my Rehab Bible, which has been one of the great ones, kind of helping me with my estimates as far as what it's going to cost me to rehab my properties. But anyways, that is all for this video. If you guys did like the video, hit that thumbs up button below, leave a comment in the section below, and thank you all for tuning in. I will see you next time. Have a great day. Bye.